What's up, everybody? Welcome to the Stocks channel. Today the stock market continues to push to brand new all-time highs, and we have a very busy week with big tech earnings, FOMC, and unemployment data on Friday. It is going to be a very exciting week. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today's SPY was up 0.79%, and we are blasting through that resistance zone that I had in the 480s, and then I told you above that we would likely go to 494, so it does look like we are heading higher towards 494. Above that, we start to squeeze all the way into the 500s, and as I constantly remind you at all-time highs, we have no real resistance because we're at levels never before seen. And yes, the levels I'm giving you are a potential resistance, but we could blast right through them like they're not even there and just continue higher. So as I've said many times, this is a strong bull trend, which means we're going higher until we're not, which means there's really nothing on the chart that tells us to short the bull trend. Even though there's always going to be people trying to call tops, don't let that be part of your plan. Simply follow the price action, and right now, as long as we're above this rising 5 EMA with this strong bull trend, I would not try to short SPY. So stay long while we have the bull trend, and I still think the critical risk level is all the way down here at 478, and if you want to use a higher risk level, then I would use this level right around 485. So stay on this bull because there's no telling how high we're going to go before we start to fall down. And keep in mind, markets can be irrational, so there is really no point trying to rationalize anything in the stock market. Simply follow your chart, trade what you see, follow the trend, and understand you should be managing your risk around critical levels. So just make a plan and be prepared for anything. And right now, we're just going to assume we're going to continue higher towards my higher price targets unless we can start to break down through some of this support. And the first line of support is, of course, that rising 5 EMA. On the NASDAQ 100 triple Qs, we're up 1.02% today, and we're very close to a brand new all-time high on intraday prices, but we did close at a brand new closing all-time high. So right here on the triple Qs, we need to break through that resistance just below 429, and then we should be well on our way into the 430s, and I do have that price target up there at 437. And this is a very simple risk level of simply staying bullish while we're above 422. If we break below 422, especially without breaking to a new intraday high, that could be a bearish indication that we're coming down towards this gap fill below 414. However, we're still above a rising 5 EMA, and we still have the bull breakout, and we're staying very bullish on this market while we have this very bullish looking chart. All of these moving averages are very positively sloping, and this is a very powerful trend. So manage your risk right there at 422, and as long as we're above 422, stay on that bull. And if we break 429, that's the next bull breakout towards the 430s. On the Dow Jones, we're at 0.58% today, and we're getting very close to my price target right around 385. And you can see we are getting there a little later than I drew, but that's completely fine because we're more focused on where we're going based on the price, and we don't know necessarily exactly how long it's going to take to get there. So in the Dow Jones, it is extremely simple. Stay bullish above 377. And if you want a higher risk level, you can use that breakout right around 380. So there's nothing in the Dow that says we can't go higher. It looks like we will continue to go higher, and we're bullish as long as we continue to close above that 5 EMA. On the Russell 2000 IWM ETF, we were up a whopping 1.75% today, and this is where I think you're going to see a lot of strength in the very near future, and today we did get the full bull trend. I've been talking about the small caps lagging behind, and I don't think we're going to see that for very much longer. So now in IWM, I think we're incredibly bullish above this breakout at 196, and I think we should have no trouble breaking out to a new high, which means we're going to break right through 204 to 205 and hit 207 to 208. Above that, we go to 213, and I think we have a good chance of getting there. So stay bullish above 196, and if we break below 196, we will have this gap to fill down here just below 193. On the ARKK ETF, we are up 4.77% today, and we did get a bull breakout on that close above 47, and we're right here at this resistance at 48. And if we could start breaking above 48, it's going to look like we have a higher low right here, right around 45.8. So the higher low, higher high breakout is essentially here, and that's easily going to push us higher towards 50 to 51. So it does look like ARKK has some bull left in it, and it looks like it's going to try to push towards those low 50s. If at any point we break down below the support at 45.8, that is a bear breakdown, and it tells us we're likely going down towards 44 and then 43. On the VIX, we were up 2.72% today, and the VIX intraday hit the 200 daily moving average and got rejected. And as you can see, this is a very bearish looking candle on the VIX. As I continue to tell you, the VIX spiking towards 15 is completely normal. That is just a normal pullback and normal volatility in a bull trend. It's only if the VIX starts to get out here above 18 and 20 that we need to be more concerned. So right now, the VIX tells us we're still in a low fear bull market, which is exactly what we see in the price action on the indices. On Bitcoin, we're currently up 2.7%, and Bitcoin did get very close to my price target at 38,000. And before we hit that price target, we're starting to bounce. And now if we get a bull breakout above 43,000 and we start to close above this previous high, it looks like we may be done with the pullback and ready to go higher. So this will be an important resistance test right here at 43,000. And if we get rejected from it, it's still possible this is a double top rejection and we still go hit my price target. So I am getting more bullish on Bitcoin based on this chart, and I would use this risk level right here, right around 42,000, and you could stay bullish as long as we're above that breakout. On Nvidia stock, we're up 2.35% today, and once more, I'll go ahead and say it, do not bother shorting the stock. There's just no reason to do it. This is an incredibly bullish looking chart, and we're still holding above this rising 5 EMA, and I think we could see this pushing towards 670, but we are going to have a very strong resistance, in my opinion, right here, right around 633. So we have plenty more time till earnings, which leaves plenty of more time for speculation. And because it's a strong bull trend, we're likely going to continue higher until we get to earnings and then possibly sell off afterward. So this is a very powerful bull trend. And right now it looks like we turned that old price target into support, which was that level at 606. So again, stay bull above that 5 EMA, and it looks like we're going towards 633. And if we break through 633, we're likely going towards 670. On Tesla stock, we're up 4.19% today, and we are extremely oversold on Tesla after that big earnings drop, which means there's a very good chance we're going to try to push all the way up here towards 207, but we will need to break above 197. So 197 is where I think we'll have the big test of resistance this week, and there's a very good chance we get there. And if we break through 197, then I'm going to be looking for this gap fill just below 207. So for this trade, you could stay bull above this support at 182. And if we break below 182, we're likely going down towards this support right around 172. I do think it's possible we go to 172, but I'm thinking we could bounce and then go hit that price at a later date. And this is more than likely what is going to play out, even though we don't know for sure. I think this is the highest probability chance. On Apple stock, we were down 0.36% today, and we did fill the gap below 192, and we do have the full bull trend, so you can stay bullish in Apple as long as we're above 188. Above 188, we could be putting in our higher low bounce that could push us to a brand new all-time high above 198. And if we do get that brand new all-time high, I have the price target up there at 204. So stay bull in Apple above 188. And if we break below that support, then the next critical risk level will be down here at 186. Below that, we fill the gap at 183. So jumping back over the S&P 500, we continue to make brand new all-time highs in what is undoubtedly a bull market, which is now undebatable because we're at brand new all-time highs. So block out all the noise and follow your charts and manage your risk around these critical levels. And this is the only way you should be trading. Block out all of the opinions and noise from everybody else. They are not going to help you be a better trader, and you do not want to have their bias in your trading. Know the trend, know the risk levels, and place your trades accordingly. Continue to rinse and repeat this disciplined and profitable approach, and you will become a profitable trader over time. We are absolutely crushing this market on Bank Trade Alert, so if you want to come crush the market with us, you can find out how to join Bank below. You get all of your buy and sell alerts directly via email and text message, and it's very simple to follow because we only trade 2 ETFs, which is the TQQQ and the SQQQ. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stocks Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.